NVIDIA stock analysis. In January of 1999, NVIDIA IPO'd for just $1.64 a share. On May 15th, 2020, NVIDIA closed at nearly $340 per share after taking a major dip down to the $180, $190 level back in mid-March. If you had invested just $1,000 back in January of 1999 when NVIDIA IPO'd, your position would be worth over $214,000 as of May 15, 2020.
Wow.
This shows the power of buying a profitable and innovative company and just never selling it as long as your bullish thesis remains intact. NVIDIA got its start by making graphics processing units, or GPUs, for things like personal computers, competitive gaming, and even cryptocurrency mining. However, in recent years, NVIDIA's GPUs have gotten so powerful that they have shifted their focus into artificial intelligence, such as deep learning for autonomous vehicles, robotics, and data centers. It is clear that NVIDIA has had an incredible run in the 21st century, both as a publicly traded company and as an innovator. But the more relevant question to us investors today is, would NVIDIA make a good investment at fresh all-time highs?
9 to 5 investing.
NVIDIA makes most of its money by selling its graphics processing units, which have a wide range of applications across many different industries. These industries include automotive, media and entertainment, oil and gas, and medical imaging. NVIDIA's broader markets include gaming, data center, professional visualization, and actually automotive. According to NVIDIA's most recently filed 10K for the fiscal year ending January 31st, 2020, NVIDIA has shifted its focus over the last several years from PC graphics to artificial intelligence, including deep learning. According to NVIDIA, deep learning basically allows robots, computers, and autonomous vehicles to perceive and understand the world. This allows NVIDIA's GPUs to deliver features and services that would actually be impossible with traditional coding. NVIDIA has two main business segments. These business segments include number one, GPU, graphics processing unit, and number two, Tegra Processor. The GPU segment is basically just NVIDIA selling their graphics processing units to customers for a broad range of applications. Applications for these graphics processing units include gaming, including virtual reality, computer-aided design, and big data research. The Tegra business segment basically includes sales of the Tegra processor, which incorporates an entire computer onto one chip by having multi-core CPUs and the GPU basically in one package. This revolutionary technology is what drives the supercomputing for robots, drones, and even autonomous vehicles. It is a challenge to understand everything that NVIDIA's processors and GPUs can do, but two things are crystal clear to me. Number one, NVIDIA is very dependent on sales of technology, which means they're very dependent on demand for technology. But here's the thing that I kind of realized when I was thinking diversification might be an issue, is that these GPUs are used in so many different places across so many different industries, so I really don't think diversification is a major concern. This diversification, however, does not make me less concerned for the intense current and future competition that NVIDIA faces from competitors like AMD and Intel. Number two, NVIDIA is a clear leader in artificial intelligence and deep learning, which takes us to the next topic in this video. A key to outperforming the market is to identify major trends that change the systematic landscape of the economy. I'm talking about trends such as the explosion of e-commerce in the last decade or so that has destroyed brick and mortar companies like GameStop and GNC. I am talking about the type of trends that will have countless losers but a couple really big winners. It is becoming clearer and clearer that artificial intelligence is one of those trends that is going to boom in the next 5 to 10 years and farther into the future. In fact, experts have forecasted that the artificial intelligence market as a whole will grow by about 37% from 2018 to 2025. As artificial intelligence inevitably reshapes the economy, there will be many losers, but there will also be some very big winners. For example, NVIDIA is one of the leading companies developing the artificial intelligence technology that will power driverless vehicles. Their computing platform called NVIDIA Drive has several hundred partners, including automakers, HD mapping companies, tier 1 suppliers, sensor manufacturers, startups, and more that all work with NVIDIA to develop and deploy these deep learning artificial intelligence systems to self-driving vehicles.
Nice.
Once fully perfected, autonomous driving will bring about many efficiencies in our economy, including the reduction of labor costs, a reduction in fatalities and motor vehicle related deaths, and fuel efficiency. This will result in tremendous cost savings for any company that relies on drivers. Another consideration is artificial intelligence will never get tired from driving too much. It will never get behind the wheel drunk. And in general, artificial intelligence is going to make many less mistakes than a human driver would. Because of NVIDIA's leadership in artificial intelligence in many other ways than just NVIDIA Drive, I think that NVIDIA will end up benefiting tremendously from this macro trend of shifting towards artificial intelligence. And as I kind of alluded to a minute ago, it is not going to just be self-driving that NVIDIA will benefit from. They are likely going to benefit from shift to AI in dozens of different ways in dozens of different industries. And let me be abundantly clear here. I am not trying to patronize anyone that has a job that could be automated away in the near future. I am simply trying to tell you that I believe artificial intelligence is going to gain more and more traction in the years to come. And as a result of this, there will be major cost savings for companies, which will result in profits for shareholders. And during this trend, I would rather be a shareholder than a bystander. And it's not like I'm exempt from this trend. My job of being an accountant is at severe risk of getting replaced by AI. I'm just hoping that I can retire before this happens. Artificial intelligence is coming and it will change society and the way our economy operates forever.
It's not an if, it's a when.
And I want to be abundantly clear here because the last thing I want to do on my channel is ruffle anyone's feathers. We're here to talk about investing. But I see artificial intelligence taking jobs as a reality. It's just going to happen. I don't think there's anything you can do to stop it. And ultimately, I would rather be invested heavily in artificial intelligence rather than just waiting for it to take my job. If you are enjoying this video so far, please smash that like button. Like I smashed this broken TV that I bought for $10 off of Craigslist in a potentially unconvincing attempt to convince you to smash the like button. Doing this small action really helps me grow my channel and reach more people and pursue my passion. So it means a lot to me. Thank you. NVIDIA's current valuation is the one thing that makes me not want to make an investment in it at this very moment, even given what I said about the growth of artificial intelligence. If you look at this historical price to earnings ratio graph that I made for NVIDIA over the last 5 years, you can see that investors are going to have to pay a historically high price per every dollar of NVIDIA earnings as compared to the past. NVIDIA's price to earnings ratio is actually at all-time highs in May of 2020. Their price to earnings ratio as of May 15th, 2020, based on the last fiscal year's earnings and the current price, is actually a whopping 75. And even if you look at the PEG ratio, which considers growth, investors are always going to pay more for a very high growing company rather than a low growth company. So their PEG ratio is actually 3.59 as of May 15th, 2020, which a PEG ratio of under 1 is what's considered favorable, so this is really not that good either from a valuation standpoint. From a technical analysis perspective, NVIDIA is trading at all-time highs, which means there is most likely going to be a lot less resistance. This reduced resistance or pockets of sellers at certain levels on the stock chart typically happens at all-time highs because there's nobody trying to sell the stock to break even like there would be at all other areas of the chart. This is an attractive aspect of the stock. However, you guys know we keep it real here on 9 to 5 Investing. NVIDIA at nearly $340 is probably just a little bit overvalued. If you look at my price to earnings ratio graph, you can see that as of January 31st, 2019, you could have bought NVIDIA for a price to earnings ratio of just about 22. To really drive this point home, an investor in January of 2019 is going to pay $22 per dollar of earnings from NVIDIA, whereas an investor in May of 2020, the time of recording this video, is going to pay about $75 per dollar of NVIDIA earnings. So clearly, based on our analysis of the historical price to earnings ratio for NVIDIA, this is not the best deal. I'm not saying nothing has happened with the company since 2019 that warrants a higher price. I'm just saying I think we could definitely get NVIDIA at a better price in the future. My personal strategy would be to wait until we see another significant market dip. I think it's inevitable given the current situation right now. And then I'll look up to load up on NVIDIA shares. But as always, this is just my strategy and you need to make your own investment decisions. Next, I just briefly want to discuss NVIDIA's revenue. Their revenue growth has been pretty solid at about a 17% compound annual growth rate over the last 5 years. I'm in accounting, so I'm relatively familiar with this, but I just wanted to let you guys know that NVIDIA closed out their year end on January 31st. So usually companies will have a 12/31 traditional year end, but there will be companies that have alternative year ends. So what does this mean? Well, this means that NVIDIA's 2020 fiscal year is going to be basically February 1st, 2019 to January 31st, 2020. And in this time period, what they call their 2020 fiscal year, they did about $11 billion in revenue.
Wow.
Next, let's talk about what's probably a lot more important than revenue in most cases, net income. Their net income has grown at a compound annual growth rate of about 35% over the last 5 years. NVIDIA finished out fiscal year 2020 with about $2.8 billion in net income, which is substantially less than fiscal year 2019, which had about $4.1 billion of net income. This is likely due to the market being flooded with used GPUs because of Bitcoin's meteoric rise in 2017 and the subsequent fall in 2018. The higher the price of Bitcoin, the more attractive it is for people to buy NVIDIA's GPUs to mine it. Whenever Bitcoin mining became a lot less profitable, many miners sold off their GPUs to others, which definitely hurt demand for new NVIDIA GPUs. Bitcoin bottomed out at about $3,000 in late 2018, all the way down from a high of about $20,000 per Bitcoin in late 2017. So the effects from this Bitcoin crash are probably felt the hardest in fiscal year 2020. Remember, NVIDIA's year end is a little different than other companies. Basically, their fiscal year 2020 would be from February 1st, 2019 to January 31st, 2020. NVIDIA's net profit margin was about 26% in fiscal year 2020, up from about 12% in fiscal year 2016. But most of these gains can probably be attributed to the Tax Cuts and Jobs Act that reduced the top marginal tax bracket for corporations from 35% to 21%. But at the end of the day, NVIDIA's margins have been pretty stable over the last 5 years. In uncertain times like we have today, it is important to consider how much cash a company has in the bank compared to their liabilities. If a company runs out of cash and can no longer service their liabilities, then they will likely have to go bankrupt or do a secondary offering, which, as you probably know, will make the stock price tank. So if you look at the graph that I made here, you can see that NVIDIA has a very healthy reserve of about $11 billion in cash, whereas they have only about $3.3 billion in long-term debt. This is a ratio that I am very comfortable with as we head into a potential recession or depression, as unemployment has been skyrocketing the last couple of months. So in conclusion, I think that NVIDIA would make a great addition to my personal portfolio because they have the headwinds of artificial intelligence at the company's back. They have excellent fundamentals, of course, outside of the current valuation. I believe that this trend towards artificial intelligence will push NVIDIA to even higher all-time highs, but I will wait until I see a market crash because I believe in the short term, the stock market is not lining up with economic reality, and eventually it always catches up. So I will be waiting until I can get a better price on NVIDIA personally. Please let me know what you think in the comment section below. Do you think that I'm going to be missing my opportunity for this price on NVIDIA forever? Will you be waiting for the market to crash to buy any NVIDIA shares? If you have any questions about NVIDIA stock, I did a lot of research, so I could probably answer them, but leave the comment because I will reply to every single comment that you guys leave. Thank you so much for watching and have a great day.
9 to 5 investing.